Green Rush, Mining the Energy Revolution with Matt Watson.
Hello, welcome to Green Rush, Mining the Energy Revolution. I'm your host, Matt Watson. Each week, we dive into the periodic table and take on another couple of elements. This week, we're going to be talking about gold and silver, and we're going to talk about it in the context of investment and vaulting services. Our special guest today is a friend of mine, Mr. Jon Potts. He's the managing director at FideliTrade. He's also the managing director at the Delaware Depository. Jon, welcome to the program.
Thank you. Nice to be here.
So let's get into a little bit. What is FideliTrade and Delaware Depository all about? I've got a simple slide here, just grabbing a screenshot of your website. Why don't you talk a little bit? Tell us about FideliTrade. What's it all about?
Okay. So FideliTrade, and I'll start out with our tagline, because our tagline kind of says it all. We work very hard at earning the trust of our customers, and we provide bullion services straight from the source. And so what I'm really trying to convey there is we're talking about bullion, not collectibles, not numismatics, bullion and the services that go along with it. And when I say from the source, we are the depository. We are an authorized purchaser of the United States Mint. So we're one of the 12 global primary distributors of the Mint. And so our primary function is making markets on bullion products to the banks, brokerage, dealer markets, and individual investors. Right. Again, no collectibles, no numismatic, no high premium. We're talking about, low premium bullion, serious bullion for serious investors. And that's the main focus of FideliTrade. And so moving on to Delaware Depository, Delaware Depository is a exchange licensed depository. We receive, inspect, hold, and distribute precious metals bullion products all over the country and all over the world for that matter. And we provide high security, safekeeping, and distribution services, again, to banks, brokers, dealers, individuals, and IRA custodians, which is a big part of our business. We're also a state chartered trust company, and the reason we've done that and gone that direction is the IRA regulations, or the IRS regulations for that, require that IRA assets be held by a bank or broker. So we wanted to be unquestionably acceptable for retirement assets, for the storage of retirement assets. And like I said, when I said we're exchange approved, we're approved by the New York Commodity Exchange, COMEX, and NYMEX exchanges to hold gold, silver, platinum, and palladium in satisfaction of regulated futures contracts.
Wow, fantastic. So characterize a little bit your the investors. Are these all high wealth personal investors, and gives a sense of institutional investment percentage wise? How much is that of the mix?
Probably in terms of dollar value of our business, most of our business is wholesaling to banks and brokerage houses. But on the retail side, we really run the whole gamut. We deal with people that might invest $100 automatically in an accumulation plan every month. Right. But we also have $25 million individual deals from high net worth individuals. So it really runs the whole gamut. And a lot of those people are, and their motivations vary quite a bit. So we have the small guy that might just be looking to accumulate on a dollar cost averaging program, $100 a month, $500 a month, $1,000 a month. We may have individuals that buy a couple thousand, 5,000, 10,000, 20,000 and take delivery to their home. And then we have people that buy, 50, 100, $25 million of material and store it with us. So it really runs the whole gamut. And the same thing is true. We deal with small coin dealers. but we also deal with some of the major wirehouses as well and major banks.
Right. So what's, one of the questions I get asked is what's the best denomination of bullion to hold? I mean, as you know, there's a whole range of sizes up to, 400 troy ounce full size gold bars. What's the distribution look like for you folks?
Yeah, I would say most of it is in the small product. And again, that usually the decision is ultimately with the consumer, of course, but it also has to do with their motivation. If they think they're ever going to take delivery of something, they certainly should be taking something from a kilo bar or smaller. And the reason for that is it's easy to move around. We can send it actually through Federal Express and deliver it to somebody overnight. It's easy for them to handle, to put in their safe deposit box, to do whatever it is they want to do with it. And they are uniform products. They are fungible products. And so when I talk about fungibility, I'm talking about products that everyone is like every other. So a gold eagle, on the one hand, it doesn't really matter what year that gold eagle was minted, unless you want to give it as a gift or something. But every gold eagle is exactly 1 ounce, and it's like every other gold eagle. One kilogram gold bar weighs exactly 1 kilogram, and that's widely recognized and easy to deal with at all levels of the supply chain. So most of it happens there. When we have high net worth individuals coming in, they're looking for the best bang for their buck. And for that, the 100-ounce gold bar, 1,000-ounce silver bar, 50-ounce platinum plate, 100-ounce palladium plates are probably more appropriate, because the premium, that price above the spot value, is actually very, very low. And so it's the best way to get the most bang for your buck. And if having it in your safe deposit box is not an issue for you, you're holding it as a portfolio diversifier, part of a bigger portfolio, and you're going to store it, then those larger bars are probably a little bit more appropriate. So the smaller the purchase, the smaller the bar. The larger the purchase, generally the larger the bar.
Right. Now, I was going to say, I mean, some, people in timers or people worried about geopolitical risk, keeping the denomination smaller to where it'd be, practical and usable in a worst case scenario becomes important. And of course, the larger bullion doesn't necessarily fit the bill. So that makes sense.
And that just to make a comment on that, and that kind of plays into what is the consumer's motivation?
Right.
Are they buying it for capital appreciation? Are they buying it as a portfolio diversifier?
Right.
Is it a hedge against geopolitical or economic risk? Is it just basically financial insurance, financial peace of mind to have it? And again, if it's financial peace of mind, you can have different opinions about how appropriate that is, but that's a very, very personal decision. And so people that sleep well at night, knowing it's close to home, that's a very personal decision. And if I may, I have a little story about this. One of our customers is a very prominent U.S. family, and I got a call from it, and this was a couple years ago, from the gentleman. He said, "John, I've been buying and accumulating metals from you and storing it with you for 20 years, but with everything going on in the world, I just can't sleep at night. I need to have it close to home. And, how can we do that?" And of course, we arranged to ship it to him, and it was a very, very a large amount of metal. And everything was fine. And it was just by sheer coincidence. 4 days later, I get a call from another family member from the same family. And he said, "John, I've been buying and taking delivery of this stuff for 20 years from you. With everything that's going on in the world with home invasions and all, I just can't sleep at night having this in my home. Can I ship it back to you and you can store it?" And the point of the story is risk is a very, very personal decision. Both of those people are absolutely right in their assessment. There's not a right or wrong answer. They just view risk very differently. And so, that kind of plays into, what is the motivation for owning it? and what is the motivation for storing it or taking delivery of it.
And I think you just answered my next question. How many people are interested in liquidating and taking physical possession? Is that a popular occurrence or fairly rare?
Yeah, and I would say our business is probably split 50-50. 50% of the people take delivery of it, 50% of the people keep it in storage. And again, that probably goes back a little bit to high net worth individuals are more likely to hold larger amounts and are more likely to store it.
Right.
And a smaller investor who's maybe buying $20,000 worth of gold, well, that fits in a small tube. That's easy to store in a safe deposit box or store at home in a home safe. And so I would say that probably our business is split about 50-50. And again, some of that has to do with also the underlying motivations. If it's for capital appreciation, portfolio diversification, and they're going to be rebalancing and buying and selling, they're more likely to store it so they don't incur the cost of shipping it to them and the cost of shipping it back upon liquidation and the time frame that takes. So if that's their motivation, they're more likely to store it. If it's just financial insurance, I want to sleep well at night. Hopefully I pass this along to my children because I'll never need it. But that is more likely to go to their home.
Before we dive back into our content, I want to take a moment to thank our sponsor, Revival Gold. Stick around for the next 30 seconds to find out what Revival Gold is all about.
Revival Gold, ticker RVG on the TSXV and RVLGF on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million-ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
Thanks for sticking with us. We really appreciate our sponsors for supporting this channel and enabling us to bring this content to you. So let's get back into it. So Jon, I know you're not a market analyst, but if you don't mind, I do have a couple charts on the market condition. Here's a 24.5-year historical look on the gold and silver price. And I've shown this chart a number of times. Gold, the gold price per troy ounce is on the left-hand axis, silver over here on the right-hand axis. But pretty profound growth here when you look at the past nearly 25 years. The CAGR, the compound annual growth rate in the price on gold is running at about 8.8% year over year on average, and the silver at 7.8%. So, I was going to ask you the question, what's the value proposition for, holding gold and silver? But I think the answer is right here.
Even if you look at the linear regressions on those, the trend lines, I did a presentation a little while ago, and I found a cute little advertisement from 1970 something of a Volkswagen Beetle, and the price of that Volkswagen in 1973 was I forget the exact number, but a couple ounces of gold and a few ounces of gold. And today, that same Volkswagen still costs a couple ounces of gold, as opposed to obviously a much, much higher sales price. So really the gold reflecting the cost of inflation and what that impact takes on it and maintaining its value over the long term is very important. And I think that's another thing to see from that, not only in terms of the capital appreciation, but it offset against the inflation rate.
Right. Now here, obviously, I'm just showing gold and silver, but I heard you talk about platinum and palladium as well. How much of the mix of your products is in platinum and palladium? I'm curious about that.
That's a very small amount. It's ranged quite a bit over the years because mostly because of the car companies. They've had varying views on having strategic stockpiles of platinum group metals, rhodium, ruthenium, and platinum and palladium for the production of catalytic converters. And when they're all in, our platinum holdings are quite large for industrial users. When they step out of that, then they drop dramatically because they are a major user of the platinum group metals. On the investor side, I would say it's a very small percentage. I don't believe that at least North American, U.S. investors really understand and have gotten the story on the platinum group metals and platinum palladium in particular. We do hold platinum and palladium bars and coins for investors, but it's a very small amount just because consumer awareness is very low.
Understood. Just to put this price climb in some context, this is from the Gold Hub. They did a nice roll up of the first half year of 2024 year-to-date returns, and they put it in the context of U.S. stocks, and showed you a few different categories of commodities and so forth. And just to give the absolute up to the minute, gold has actually appreciated some 16.4% year-to-date when you go to today. Silver slightly higher at 21.3%. So performing quite well compared to most other investment categories. So just to give people some context as to the performance of these metals. I don't know if you had any comments there you'd like to add.
Yeah, I think I think Americans are a little bit late to the game. Right. If the price drops, we see a lot of people selling, and my observation has been it's not so much the price of any of gold or silver, it's the price action. So as prices are going up and up and up, consumer demand goes up and up and up. If it drops sharply, you would think people would jumping in because there's a buying opportunity. But no, right. They sell, they liquidate if it drops quickly. And then when it starts moving back up, they start acquiring. If it drifts down, they tend to be slower liquidators. And so it's kind of the price action that seems to drive the U.S. investor more than the actual price itself.
Is that a U.S. specific phenomenon, or do you see that for other?
Yeah, we're primarily based North America, so I don't really, I can't. You'd know better about the international market than I would.
And that was going to be one of my questions. How sticky is this investment? I mean, I was thinking that anybody's going to pay for the vaulting and whatnot would have a much longer view, and it'd be a stickier investment, if you will. But what you're describing is some percentage of your folks are pretty much in and out as needed. Yeah. So for the vast majority of it, it's very sticky. It's got a 10-year time horizon at least. Right. People buy metal not on. Yes, we have some speculators, but for speculators, they're probably going to be in commodity futures or ETFs, something like that. If they're going to be looking to buy it because they think in the next 6 months or the next year they're going to be liquidating and taking profits. But the vast majority of people in the physical market are really investors. They're buy and hold type of people, and they're holding them for those capital appreciation, portfolio diversification, hedge, financial insurance reasons, and those motivations, other than the capital appreciation, the other three are very long-term strategies. So I would say that 90% of the physicals we sell are going into some long-term investment that they're held for years and decades. And probably the most likely thing that we're going to see is when dear old dad passes away, the children are going to come in and liquidate it because they just don't have the understanding of what the prior generation might have had on things. And and they will get to know it. I'm a baby boomer. 10, 15 years ago, all the baby boomers were liquidating and thinking, what was
what was Dad thinking about buying this stuff? Just liquidate it. And then we went through the 2008 crisis, and all us baby boomers go, Dad was not as stupid as I thought he was. Maybe I should be having some of this. So it ebbs and flows, but it's very long-term holdings.
I yearn to hear those words from my kids. I'm sad to hear I have to die first before they'll say it. So, okay. Well, let's talk a little bit, just for anybody who's not familiar. We'll show gold first, just to give you a sense of the supply-demand picture. You look at the demand buckets of central banks, bars and coins and all the various forms of investment that you're talking about. The technology demand, some 6 to 9%, per year will go into largely electronics, semiconductor, and some medical applications, mostly. Jewelry is a big piece of the demand, and then ETF, either inflows or outflows, making up another segment of the demand. So I wanted to talk a little bit about central banks, and so I have this slide here. This is also from the Gold Hub, just to show people the trend on, central bank buying. And we've talked a lot about in 22 and 23, we've seen a bumper year where, central banks around the globe are stepping up purchasing. They've only got the Q1 numbers reported so far. It looks like this. If you were to multiply that by 4, just to give you some context of where 2024 would end up. So, central bank buying certainly is helping to spur this price is the message I take from this. And I don't know if you have any thoughts there, John.
Yeah, I mean, it's really hard to tell what's going on. Right now, product demand in 2024, product demand has dropped, and demand for small bars and coins in the U.S., but the price keeps rising. So what that's really telling you is the demand for a particular product may be down, but the overall demand for gold through central bank and maybe international buying in international markets is certainly increasing and pushing the price up.
Understood. Another question I wanted to get into was around, doing this physical purchasing and vaulting with you versus ETFs or, exchange traded products. Here I have a chart that shows the future net positions. Obviously the markets are net long on gold right now, and more bullish than ever. ETF holdings, surprisingly, there's been some little bit of liquidation in here over the past couple of months, but still a substantial, over a half year's worth of supply held in ETFs. Make the case, why buy physical and vault versus an ETF, which, one of the beauties of an ETF, it's easy to get into and out of, if you will.
Well, and I think your ETP holdings chart right there explains it very well. The people that are in that product are generally in it for capital appreciation, and if the price rises quickly, they're going to liquidate, and that's what we've seen over these. We've seen more recently with the holdings in those dropping. So, I'm not. ETFs and commodity futures, they're fine. They're good products, but they are different. They are a financial instrument. They are. You can't ever take possession of a ETF. It's just not for that. And however unlikely it may be for BlackRock, State Street, major financial institution to really blow up, you're still beholden to an entity. It's not your own destiny in your own account, in your own hands, having physicals. So really the difference between physicals is, okay, if you're looking for capital appreciation, maybe that's a better choice. But if you're looking for a hedge against inflation, financial insurance, those sort of things, having the physical product that is not a liability or beholden to anybody. It's not a company liability, not an entity liability, not even a government liability.
Right.
You can take that product any place in the world and it's recognized. A gentleman I used to work with, and I don't know if they still do this, but he was a pilot. And part of his survival kit was some gold coin. So if he got shot down over enemy territory, he had something to barter with. And that just illustrates how important the physical nature and the physical product can be. So they're different products for different functions, and they have different risk profiles.
Interesting. Let's talk real quick about the silver market. This demand, supply and demand outlook, this long-term outlook is more of a crystal ball than a forecast. But I think the outlook for silver is the mining situation is going to be under some pressure over time and likely to decline. There's some added volume that comes to recycle, and questions, will this recycle volume grow? And I contend not until the price climbs substantially. It has to nearly double before I think you'll see this recycle volume really contribute more. But a much more diverse set of demands, obviously, going into the silver bucket here. All sorts of electronics, semiconductor, consumer electronics, power distribution. Of course, solar PV is the big, more recent growth item where we've seen just a huge step up in volumes going to solar PV. I have an outlook we're going to get to over 300 million troy ounces a year, and then begin to start stabilizing through the rest of the next couple of decades. Automotive demands are creeping up on us. Cars are becoming more and more, electronics on computers on wheels, if you will. And so really a situation where this product is going to become more and more of an industrial demand type of products, and yet net physical investment here at the top and jewelry, I could see those coming under more strain. What are your thoughts? What are you telling your clients about silver long term and your outlook?
Well, personally, I like the silver story because it's not just a monetary product, it's a monetary and industrial product. So it has a great story on both sides. Maybe not reflected in your numbers, but what we've seen over the last 5 years with US investors is they seem to really like silver. We sell and move a lot more silver than we do gold. And I don't know, it's kind of like stock prices. Would you rather buy a stock that's priced on $100 a share or $50 a share? Value is value, so it doesn't matter. People tend to like the lower cost thing. I think that's part of it, but also that industrial story, I think, is a good fundamental reason for owning silver as a long-term investment.
Right. No, it's going to be interesting to see how this shakes out by the time we get to the 2040s. How much physical investment is going to be available in this silver market. It's going to be a market under strain, I think, with all this industrial demand continuing to grow. So it'll be fascinating to watch. So let's wrap up with let's talk about silver and here the futures and again the ETF or exchange traded product holdings. Similar to gold, we're seeing a little bit of liquidation on these ETFs. What's interesting to me is in terms of years of supply, it's actually a bigger amount of silver holdings in the ETFs than gold. Gold was about 0.56, so you have closer to 3/4 of a year worth of supply in the ETFs today in silver. Any thoughts or comments here?
Well, we're the third largest silver depository for the New York markets, and that's a pretty fickle market. I would say that I have no idea where that's going to go. I mean, it comes and goes, and sometimes I'm just scratching my head wondering why the sentiment has changed. So that is a tough nut to crack in terms of figuring out what's going to happen next, let alone even what's happening in the present term. So so that's I don't know what to say on that one. Maybe that's why we're still in business after all these years, is because we don't speculate on guessing what's going to happen next. We just supply services.
Well, let me speculate for you then, John. So
that's your job.
One of the big geopolitical risks that I don't think any of the analysts are talking about anywhere near enough is the Taiwan risk, right? And Taiwan is strategically so important to semiconductor, right? They're close to 60% of the wafer or front-end foundry capacity, and they're some 90+% of the capacity of the finer pitch nodes, the more advanced chips, the wafer products that they just dominate all the advanced chips and all the AI capabilities that we have. And if some action were to go down there, you could see a pretty significant trade war developing pretty quickly if this were to go down. And boy, a lot of saber rattling here over the past couple of weeks. The activity from China militarily is actually picking up, not decreasing. And so one of the I think the big risk that could happen here is China taking that action. If they're going to take action, they're going to take action in the last few months of a Biden administration. I think that's would be a pretty logical timing sequence for them. And so I get very concerned about that. Do you hear that from any of your investors?
Yeah, we do. And the China factor coming in at probably a lot of different levels, but in the South Sea is especially troublesome.
Right. Well, I want to wrap this up, and I want to bang your drum a little bit. You talked about knowing who you're dealing with. When you deal in the precious metals world and you're making transactions that are so large, having confidence in who you're dealing with is oh so important. And dealing with people of character is everything. Is what I've learned from trading some couple $100 million in precious metals over my career. So speaking from experience, I could tell you I've had the pleasure of getting to know you, Jon, and your family, and I could testify without any hesitation you are indeed a man of character. We're both special needs parents. We've got that going for us. So we both have adult special needs kids, and I could just for anybody listening, it's been a pleasure to get to know you over the past couple of years, and glad to have you on this program, Jon.
My pleasure. Thank you very much. Always enjoy talking to you.
Not a problem. And I encourage our listeners to like and subscribe. And next week, we got a special guest next week. It's Marge Ryan, who is from Johnson Matthey, and we'll be talking about PGMs and as it relates to the hydrogen economy. So join us next week for that discussion. Thank you all. We'll see you again next week. Take care.
Green Rush, Mining the Energy Revolution with Matt Watson.